What is up, guys? Logan here with another video. I'm so excited that you guys are here for another one. Make sure you leave a like, comment below, and subscribe on this video as it helps me a ton. It helps me with the YouTube algorithm. So I really appreciate that. Make sure you check the links in the description so you can have the link to the Discord. You can also have free stocks through Robinhood. You guys know the dealio already. So let's get right into this video on the wheel strategy. And I'll show you the stock that I'm running it on and kind of my plans with it and how you can do this as well. You can see that Palantir is currently trading at about $25 a share, and we can scroll down. You guys can see I have 100 shares at the average cost of $27 exactly. So my current market value is $2,500 on this, and I'm currently down, it says right here, 198 in my total return. So what's really cool about running the wheel strategy is what it's called. So I got assigned these shares at the end of the day on Friday last week, right? Palantir had closed at $23.90 and I sold the $27 strike to receive $150 credit. So even though it says I'm down 184 right now, this is gonna jump around a lot this video, just so you guys know, because we're during market hours, right? So if we scroll down, you guys can see here my recent activity on Palantir. You can see that I had the $27 put that I sold for 150 bucks. But then I got assigned 100 shares at $27. You guys can see here, price of assignment. That was $23.90, and the position change was to buy 100 Palantir shares. And I'm super excited. I love Palantir. I do not mind holding them for the long term, even at this price. I mean, even though it says I'm down 192, you gotta remember I received that $150 credit when I opened that position. So that's the one thing that I take into consideration. Well, I'm not really down any money. Yeah, I'm down. If I was to sell this at a loss, I would take a $45 loss, but who cares? I bought these at 27. I can just hold these out for the long term, and I'm not really down $200 as of now. I'm down about $50, right? Because of that $150 credit. So that brings me to the next point that I want to touch on, which is now selling a covered call on this position, which then would lead me into the wheel strategy is what it's called. I'll go into it. I'll show you guys how to execute it right now, and then also the downfalls of this strategy. So if we're selling a covered call, especially on Robinhood, we'll go and we'll take a look. So we're gonna make sure we're on the sell, between the buy and sell, and then the call side, right? Most people sell puts or buy calls, buy puts, but let's sell a call, right? So this is what we're gonna wanna do. So we're gonna look at the premiums right now and pick an expiration date. I can choose for this Friday. I can receive a credit and say, hey, you know, I don't think Palantir is gonna go above 29 bucks. So if that's the case, I'll collect my $15 and then I'll move on for the week. Or we'll look at March 12th, and I think this is where I would make a decision. I'd make a play around here. I think there's more premium up higher, but then you gotta remember I'm in this position for a whole extra week, but I love running the wheel, so I'm totally cool with that. And we can even see that the $31 call is giving out $38. And that's just for selling the call against it. If Palantir doesn't reach 31, I collect my full amount of premium for doing nothing. It's a really, really cool strategy. So that's what I would look into. Let's fill this in real time. Let's look for something that I'm comfortable with, right? So I'd like the $30 call. So let's come back to the $30 call at the end of the video and we'll purchase it, but let's go through the pros and cons of this strategy. So I'm gonna take you guys back to my Palantir position in general, and we can look, like you guys will see, it's gonna hop around this return. But the one thing now that we have to take into consideration is my average cost of $27. Now I have 100 of these shares. So if I want to sell a call, I want to sell a call that's at least at the $27 strike or above. Now that's the golden rule, I think, for doing the wheel. Yes, you want to sell a covered call that's higher than the average cost, because if I was to sell a covered call at $26 and receive, you know, really good credit out of the gate, I could do that. But at the same time, if it's above 26 at expiration, it's gonna sell all my shares at 26. I will take a $100 loss that I didn't have to take if I was just to move it up higher, collect less premium, and then I'm also not taking that loss at 26. So that's, if we went to look at that March 5th, and I was like, well, heck yeah, dude, I'll sell the 26. It's giving out 66 bucks. Boom. Yeah, I could do that, but I don't want to take that $100 loss if I don't have to. So that's what's really nice about the wheel, and that's my golden rule, is always sell a call that's above what you paid for it, because at $27, I still think Palantir is a great deal. We look at their past month, it's down 32%. If we look at their all-time high, that almost hit $40, and I bet the all-time high is above 40. Yeah, 52-week high is $45. So owning these shares at 27 is not too crazy for me. We've had tech move around a lot this past week. I really like this position. So we'll come back and enter it at the end of the day for something that we really want to enter. But if we're looking here, now we have to take into consideration the cons. There's two big cons for me when it comes to selling covered calls and running the wheel strategy. So we've seen Palantir kind of fumble around, but let's say I do end up selling. I hit trade options. Let's say I do the March 5th for this week, and I even go way up here. I select the $29. Let's say I hit review, and as you guys can see here, I'd get $15. As long as Palantir doesn't go, well, I'll still get it no matter what, but as long as Palantir doesn't go above $29, I'll get to keep my 100 shares, right? So that's the other thing I have to take into consideration. My collateral is my shares, and it's not a set dollar amount. I could collect the 15, but here's what sucks. If Palantir is to this week rip to like 33 by the end of the week, I would still be selling all of my shares at $29, and that would leave $400 on the table, right? Which would suck in my eyes. Like, yeah, I got $15 today, but if I knew what the price was gonna do, if I had a crystal ball and could see what the price was gonna do, where the stock was gonna go, I wouldn't be doing this. I'd be like, oh, I'll just wait till it hits 33 by Friday. So that's the other thing. That's the one big downfall with this strategy, is your gains can be capped depending on if it does go above your sell. It's just like on the put side. If you sell a $27 put like I did, and it closes below, let's say mine closed at $23.90, well, I could have sold the $24 put. Yeah, I would have collected less premium, but I would have gotten shares way cheaper, and there wouldn't have been that gap, right? So that's the other thing that you want to take into consideration. It's like this, but on the other side. The other thing that we want to take into consideration is, what if Palantir just starts falling? I haven't picked anything up yet, and Palantir this morning opened at $22. Well, that's not leaving a lot of premium for me anywhere above my sell strike at 27. So I wouldn't want to be selling the $25 strike, even if we're at 22, and that means I wouldn't be getting very much premium. As you guys can see here, sell call, let's say it was at the 28. I mean, that's just $3 away at 28, and it's only giving out 23 credit. So it would pretty much stump my entire growth on my portfolio if I have to sell below my 27 strike to get good credit, or if the premium is so small, I'm wasting my time in this position. So that's probably the biggest downfall, I would say, when it comes to running the wheel strategy, is if you get into a stock and the price continues to fall. Because now if you want to sell covered calls, you have to do it below where you initially got assigned. And if then it goes above that, your gains are capped, and then you would be taking a loss on your shares, when if you would have just did nothing and didn't collect a premium and waited, then you could have just sold these shares at a higher strike. So that's the thing with Palantirs. I'm going to be watching, and we'll be looking at a couple of these positions to take and see if it's worth my time, if it's worth the risk. And what I really like about this though is it's a very bulletproof way to not lose money if you are able to get a good premium and the share price consolidates or goes bullish but doesn't completely rip past your call sell. So that's what I really like about this strategy, is if we look back, Palantir's 25.22 now. The whole time we've been making this video, it's been hovering, and I plan on taking a position pretty soon. And the higher this goes, the better credit I get, but that's also right, like I'm limiting my upside when I sell a covered call, because if this thing rips back to 40 and I sold the $31 call, I'm gonna be sitting here like, man, I left $900 on the table. Should I just hold these shares? You know, that's what goes through my mind, right? Or if I'm able to collect a small credit, I can make up for that difference from where Palantir is right now. And since Palantir is currently at the top of this range right now from where it was pretty much earlier, it seems to be heading back that direction. I think this is a great time to enter call side on them, or I'll sell a call. So let's pick for March 12th. We can get a little bit more premium. Yes, I'm in this trade a little bit longer, but I'll get way better credit and have better runway. So let's pick the $30 call. I'll sell the $30 call for next Friday. Let's see if we can get this to fill right here at 47. So this is me saying that I'm okay with selling my shares on that day if we get above $30. As you guys can see here, I just received the $48 credit. My collateral is my 100 shares, and if this is to go above 30, I would make $300 on that difference, plus the credit from the first time and the credit from the second time. Now I may end up opening a second position on Palantir, could average my cost down and maybe grab another one. And I don't really see the issue there unless Palantir is to fall down to $22, $21, maybe even $20, right? Yeah, I received nice credit on the front end, but if I come back to reality and I have 100 shares and I bought some at 27, some at 25, and I have an average cost of 26, well, I'll be down about $1,200 on that position. And yeah, I made really nice $250 in credit, but is that where I want to be with this position, right? So that's the other thing you have to take into consideration. Now let's hop over to the calculator. Now if we take this into consideration, you guys know I had the $27 strike, so we received $150 credit 2 weeks ago, and then I got assigned on these shares. Now we just opened another position to receive $48 credit, and then if this is to close above $30, we can add the $300 that I'll make in capital gains, and that will be over a whole month of time. So a whole month to make $500 with just $2,700 put up. Or that's of course if I was to, from start to finish, get assigned on my shares at 27, which I did, and then received my $150 credit when I sold the put initially. And then if Palantir in 2 weeks closes above 30, I will get my $300 in difference from 2,700 to selling them all at 3 grand. So that's what I'm really excited about the most. And then the $48 credit I just received for selling the $30 call on Palantir. Basically $500 in a month's worth of time, you know, just under a month, right around there, is fantastic. If Palantir does fall, I could always close that sell call out for maybe half my credit and then pick a new one, right? As long as we stay above $27 for all the calls that I'm selling, I'm completely comfortable with it because I'm receiving credit initially, and I can now take that $48, I could move it to my bank, I could go buy a sandwich, I could go do whatever I want. I could also buy shares with it. I could buy more Palantir with that credit they just gave me at this price right now. Seriously, like the sky is the limit with this strategy, and I think it's fantastic. You know, there's only that downside risk of if you get assigned and then it drops out beneath you and now you can't sell a call higher, so you're kind of stuck with these shares that are down quite a bit. And you're like, what do I do here? So that's the one thing with this strategy that I always keep in mind, so that I don't over leverage myself in it and then I go, shoot, my shares are down 40%. That's gonna be everything for me in this video, so I hope you guys enjoyed it. Please leave a like if you got some value out of this video. I'm super excited to start running this strategy, and it's a great way to run, you know, with credit spreads. So let's say I do credit spreads still mainly and then have a wheel or two going on in the background, because it's just a great way for consistent income if you are buying a good company. So make sure you're buying a company who isn't a pump and dump stock and not in sectors where they shoot up to 60 and then shoot back down to 10. Be careful with the ones that you play and make sure they're companies you're okay with holding shares of. Now I want to start running this on Snapchat and DraftKings. I think those are two great stocks to run this on. But Palantir for now is where I'm really comfortable doing it. I like Palantir over the long term, and I'm totally cool with holding these shares for a year, 2 years, 3 years, or even 2 weeks, 3 weeks. I'm pretty indifferent when it comes to Palantir, and I'm not absolutely in love with them, but I really do enjoy this company. So that's gonna be everything for me in this video. I hope you guys have a fantastic day. Please leave a like below, make sure you join the Discord, and I will see you guys in the next video.